Hello, everyone. This is Socrates with the Hyperwave YouTube channel and Lucid Investment Strategies. I was expecting to be joined by Tyler Jenks this evening, but there maybe was a little bit of miscommunication, and it looks like it'll be just myself this evening. So if you are wanting to hear Tyler's thoughts, I saw that he did recently go on with Tone Vase and shared his analysis there. So feel free to head on over to Tone's channel if you're wanting to get Tyler's most recent analysis. However, I do know that many of you were expecting us to come on air this evening to cover the weekly close of Bitcoin. So I did want to make sure and hop on and provide you guys with my analysis as quickly as I can. Always try to keep it brief, but generally go a little bit longer than expected. And that might be the risk today because there certainly is a lot to talk about. The markets are in some very interesting spots, and I have been watching them like a hawk and will be very excited to share my thoughts here. Going on screen share now. Okay. Should be sharing my screen. All right, looks like I am. And now I am pulling up some charts, taking a look at the Bitcoin weekly close. Let's get everything else off of the chart and just take a quick look at some candlesticks. So weekly close on Bitstamp came in at $11,469.96. And that is very significant to me because the most important technical factor that I have been paying attention to is this shooting star on the weekly chart that came in the week of June 24th, 2019. That is a high volume shooting star, which is a very strong indicator to me that a short or medium term reversal is coming. We see this selling volume outmatched anything else that we have seen really since back in here, and on some exchanges it even did outmatch that. Whether or not you think that 90% of this volume is fake or manipulated in a sense that it's from wash trading on exchanges with a low or no fees, well, it's still something that I pay very close attention to, because even if 90% of this is fake, well, still 10% of it is real, and 10% relative to the other bars, if you take 10% of those, it's all relative. It doesn't matter if we're looking at 100% of this volume bar or only 10%. It's still what I want to see is how does this volume bar compare to the previous in the last couple months. And I don't really care if the majority of it is from wash trading or other types of fabrication. And of course, there could be ways to make it look like there was more selling volume here than there was, and maybe less buying volume here than there was. But I can't waste my time thinking about all the ifs and the buts. I have to trust the technicals as I understand them and as they've worked for me in the past. So this was a very important candle to me. And you may remember me mentioning that breaking down first the body, the close, and then the low, that really confirmed that reversal candle. And now we have not closed down there. In general, when looking at confirming a shooting star, you don't need a close below, but that is something that I pay very close attention to. If entering or selling right around here based on confirming this shooting star, you're still in that position. Just if you're trading candles and only candles, then your entries were selling at 10,768 and selling at 10,328 with a stop loss at 13,920. So you'd still be in this trade, but you wouldn't really be thrilled with this close. Closing back above this body and then back above this high from the week before is very significant, and something that is definitely on the bullish side of things. So just looking at the weekly close and basically nothing else, it is bullish to neutral in the sense that we're still well below this peak, but we did break back above this body and this high. So on a spectrum of 1 being bearish, 5 being neutral, and 10 being bullish, I'd give this like a 6, 6.5, slightly leaning towards the bullish side, just based on this close. Also would look at the wick below being slightly longer than the wick above. So we'll give this a 6.5 on the scale, saying that this is definitely leaning bullish. We've got a longer wick on bottom than we do on top, closed above this body and above this high. So that gives us definitely some information, but definitely nothing I would be acting on. So let's go ahead and zoom in. For me, understanding short-term price movements, the 4-hour chart is always where I like to start. And it's kind of counter to what a lot of people, they start with maybe the weekly and then go to the daily and then go to the 4-hour. I really like to pay really very close attention to the 4-hour and then zoom out to the daily and the weekly to confirm what I'm seeing on the lower time frames. That's really what tends to work best for me. I started with the weekly because that is the title of the show and it is what just occurred. But when I'm analyzing charts, I'll generally be starting my analysis with the 4-hour, and then I'll take a peek at the daily, the 3-day, and the weekly, and make sure that they are showing me the same thing. And if they're not, then I always do trust in the higher time frame much more than the lower. Okay, so we are seeing some very interesting price action here. We came down and got a bounce off of the 200 EMA after creating a lower low, got back above the 50 EMA, and then this is where I have been watching it like a hawk. In the last show, I mentioned that I do have a small short position that I was interested in adding to. And this candle is when we did that show. I remember it very specifically because it really looked like I was going to get the sell signal I was waiting for, with the 9 EMA making a bearish cross below the 50 EMA on the 4-hour chart. That was going to tell me to go ahead and add to the position. Also was really wanting to see a close below this area here at 10,977. After the show was over, I didn't mention it live, but I kind of noticed this head and shoulders. I saw this head right here, shoulder here, and shoulder here. And noticed that that was kind of in line with what I was seeing, that if the 9 EMA crossed the 50, then I would expect a return to the 200, and that is basically what we were seeing from this head and shoulders if it was to confirm, which it did not. I was considering the neckline using the bottom of this wick and this close and this open at about 10,980. So we came very, very, very close. And as you've probably heard me say before, when you get really close to getting this sell signal and it doesn't happen, usually you'll get a pretty solid reaction to the other direction. So this right here was kind of making me gulp a little bit. We closed back above this peak at 11,447. We now were back above the 9 EMA and had failed to stay below the 50 long enough to get that bearish cross. Now I was really watching for a significant reaction to the upside, and it didn't happen. We did resist a little bit lower. So in the last show, I drew a channel that, if you guys had been paying attention to it, it has been very effective over the last couple days or so in terms of predicting this area of resistance. And this is a hugely important boundary line for me. So we see that I was able to draw this by connecting the candles on June 28th to July 3rd, again on the 4-hour chart. And that was drawn in around here when we were doing this show. And when this bounce came in right here and I started to gulp a little bit, I went ahead and set some hard stop losses right here, about 12,089, and then about 12,375 or so. Reason being is that if we are able to break through $12,050, that would now break through this bear channel, and it would give us a higher low right here, and it would be confirmed with a higher high. That's if we can break through 12,050 and get a higher high right here. Then I would want to be absolutely out of my short exposure, and I would even be interested in re-entering into long exposure if we can break through 12,000, that 12,000 boundary. Cracking open another Coors Light. Sorry if the gulping is annoying you a little bit, but it's the evening show, and for that I like to have a couple beers by my side, and this evening is no different. So cheers to anybody else out there who is joining me. My mountains are still cold on my can, and it is quite refreshing. So cheers. And so yeah, here's what I'm looking at right now as the most important sort of boundary for the price action of Bitcoin. If we can break through here after getting about a 35% correction and finding support at the 200 EMA, then it really could be off to the races. I do not expect that. Even though we're getting very close to that level, I still think correcting down back down to the $10,000 area is the most likely for me. Even though it kind of looks like we're getting like a higher low here and a higher low here, that doesn't matter to me until it's confirmed with a higher high. Let's kind of take a look at a bit of a fractal. Those that have been following my analysis for a little bit know that I love fractals and have kind of been seeing a little something like this, where you get that kind of sharp correction bounce that creates a lower high, but then it looks like you get a higher low, but in reality it's just a fake out. You get a lower high right afterwards. So that's kind of what we're seeing right here, and as far as I'm concerned. So what do we have? Sharp correction, and that is the first thing that happens. Sharp correction here from 14 down to 10.3 or so, and then a bounce and a breakthrough of the 50 EMA. Okay. And then what looks like a higher low, let's do right here. That will be green to indicate bullishness. Okay, and then we get the lower high here that basically leads to the next significant down move. So that is what I think. That's what I'm seeing and what I think is most likely. Again, I'm not suggesting anybody do anything based on this information. I'm just sharing my analysis for educational purposes to try to help you guys learn technical analysis and to kind of share the different ways to analyze charts in the ways that I prefer. Um, Basically, in terms of a number of ways. We've got trend lines, the moving averages, and also fractals, and that is what helps me to determine what I think is most likely. But I'm going to be wrong an awful lot, and you don't want to be taking trades just because somebody else suggests something or analyzes something. Only do it if you are coming to a conclusion based on your own analysis. So that is my disclaimer there. But this is essentially kind of what I'm thinking is the most likely outcome, in the sense that we got this sharp spike after the correction, creates a lower high, appears to find support from this 50 and create a higher low, but it's never confirmed with the higher high. And then we get a sharp correction. So here, sell off, bounce, support from the 50. It kind of looks like it right here. I gulped, right? I'm like, oh boy, what do I need to be getting out of my shorts? So it looks like we found support here, kind of green arrow, but waiting and being patient and waiting for a confirmation of the higher high appears to be working out. Now, I did expect after the red arrow to continue down, opposed to another sort of bounce from the 50. So this again kind of made me question my analysis. But I'm loving what I've seen over the past 8 hours. We came back up and wicked off of this trend line again, which appears to be a third lower high, which this one doesn't have, which kind of changes the fractal nature and is kind of important. But what is most important to me is that resistance is moving down and support is moving up. So this is really a do or die zone. When you consolidate this tightly, it is time to pay very, very close attention. Often people will get frustrated by every $500 move in here. You're thinking this thing's tanking, you're thinking this thing's exploding, you're thinking this thing's tanking, you're thinking it's taking off. So now, fool me once, twice, 3 times, 4 times, fool me enough. I'm just going to quit paying attention to this stinking thing until it really does move. And then when it does happen, it's taken off so hard and fast that you have entirely missed any sort of opportunity to take advantage of it. That's you do not want to be that person. That is most common. This is something that I really, really like, seeing this tight range in a volatile market. That tells you that volatility is coming and that you should be prepared to go in either direction. It's very, very important. And that's very hard for a lot of people. Myself included sometimes. When I'm really feeling like this thing's going down, if this starts to take off a little bit, I need to be having my finger on the trigger to re-enter so that it doesn't get away from me. And that can be quite tricky. And it's made a lot easier, in my opinion, when you are stuck in a very tight, well-defined range. Once this range right here breaks, let me just go ahead and delete everything else, make it as easy as possible. Once this breaks right here, I'm expecting a big move. There absolutely could be a fake out before the big move, but this is where you just can't really consolidate too much tighter. Maybe we've got another day, maybe, to keep going in between here, but that would be the most that I could see. And I've got orders in place to be ready for both directions. And that's why I love these tight ranges, because basically if it breaks down, I'm still ready to add to that short. And that's what I'm wanting to have happen. I'm out of a lot of my spots. I am seeing this thing as needing another month or so to correct. I'm seeing some unfilled areas. that should really be retested. The healthiest thing for me, for my bankroll, as well as for the life cycle of Bitcoin, I think is a correction down to 7,500. Or even 62 to 75. So that's really what I'm wanting to see. And if this thing breaks down, I've got orders set right below 11,100 to add to my short. I don't even need to see a close. Maybe I get kind of trapped if there is a head fake before the real move. That's okay, because if this does get below this candle here, that made me, this one right here, that is July 7th, 2019. It took us from 11,250 up to 11,550 on an open to close basis. If we break down below that low, then I am confident that this thing is correcting further down. Conversely, if we break above this recent high right here at 11,750, I am confident this thing's going higher. So how am I set up? I am set up with orders to make sure that I'm exiting my shorts first and foremost if this thing does break to the upside. And then secondly, I have orders to add to my short if this thing breaks to the downside. And then I will be looking at rebuying spot. If this breaks to the upside, my stops get closed and I am sufficiently happy that it doesn't look like a trap, it stayed up there for long enough, or it's supported by a big volume, then I will be looking at re-entering into significant spot exposure. That is what I think is, I'm giving that like 35% or so, which means I'm pretty confident that this area of resistance should hold. Anytime I'm saying like a 65% probability, that's really high on the confidence spectrum, even if it doesn't really sound like it. So I am really feeling like this thing should still continue to correct to the downside, at least at the bare minimum to retest this 200 EMA. And what I would really like to see is for us to come back down into this 7,500 area or so. So now from the bullish perspective is that we're kind of seeing an inverse head and shoulders off of the 200 EMA, which is highly intriguing to me. Okay, so we give it the head. We give it the shoulder. And we give it the shoulder. Okay, so this is potentially a bullish sort of reversal pattern off of this big down move, in the sense that you have a low that is in between two higher lows. This is a very important sort of setup to me. Let's check the volume profile. We would want to see volume dwindling towards the low and sort of picking back up as it's establishing the higher low. We do not see that here. What's even more important to me is the neckline. You really want to see a horizontal neckline for this pattern. It tells you that price is coming up to resistance, eating away at it, finding a higher support. And then on this one, it's been eating away at this resistance so much that now it can no longer hold and you break right through. So that is really what you want to see out of this pattern. And because of this bearish neckline, I don't consider this an inverse head and shoulders. I'm considering this a bear channel. Now, if we do break through this bear channel and we do break back 11,000 750, and we do break back above 11,809, 12,000, call it, those three areas. Now we've kind of broken above what could be sort of a horizontal neckline, which tells me that we have broken above the resistance area. Now I'd be very intrigued by that pattern, and would say maybe use this as the neckline and would go there, giving us a measured move back up to about 14,149. That would be very intriguing to me. And I do think this was something that we kind of were looking at back in here, where I frustrated some people by saying that I don't really know what's going to happen, so I'm going to prepare for multiple outcomes. But the people that really understand what technical analysis is and what trading is, that didn't frustrate them at all, because they realize that, oh, preparing for multiple outcomes is what helps you to be mentally ready to pull the trigger when one of those outcomes does happen. And when I was going through that, I realized that, man, if we come back up to right around here, that does seem like it could be a very interesting selling opportunity based on the fractal nature that I'd been paying attention to, that you have these huge run-ups, big correction, and then you create this new high, which is a big bull trap, and you get a sharp correction. Same thing happened here. Sharp correction, run up creates a new high, big bull trap. Anybody that bought that almost certainly lost unless they had a big time horizon. And then that came right back. So if we do break through this channel and we do break through 12,000, then I'm very intrigued by this inverse head and shoulders type of pattern. But I still would think that this would be a selling opportunity and just another head fake to get everybody who is afraid of missing out to buy another top. Again, I think that's the lesser likely of the two. The most likely outcome from here that I see is this resistance holding, this support breaking, and a 200 retest. And I really think that we're about due for a bearish cross with the 50 EMA, which would tell me that it's going to be a medium-term correction opposed to just a short-term correction like we're seeing right in here. Okay, so that is going to cover pretty much what I wanted to look at about Bitcoin. We can go ahead and take a quick look at some higher time frames. Still haven't tested this 50 EMA on the daily chart. Anytime I see something like this where we're coming close, and never returning there, that's an indication to me that perhaps I should adjust my moving average. My moving averages are not set in stone. I always want to adjust them to try to make sure that they are doing what they're meant to be doing, what they're designed to be doing. And in this case, my moving averages are designed to be acting as support on these big pullbacks. And it's working on Bitcoin on the 4-hour, but on the daily, not so much. So therefore, I want to zoom in and see if another time frame is working better. If so, then I perhaps want to use that as my default for this chart. And here is a great example. Seeing the 50 was close, but it was no cigar. Every time we tried to correct there, we pulled up short. This 32 is quite intriguing. It is something that I like to use on faster moving assets. Alts like the 32 EMA a lot. It is something that I am intrigued by for a number of reasons. And so that's usually where I'm going to be zooming in if it doesn't look like the 50 is working. And here we see the wick down, wicks below, closes above, and that tells me that this is the better moving average to be using on the daily. So let's see. We notice that the 4 and the 9-day EMA are still in a bullish cross. That is very significant. That is a short-term indicator telling me that the short-term trend is still bullish. So something that I will be keeping an eye on. We'll go ahead and throw on the TD sequential, and we've got a bit of a no trade zone. I believe that was the title of the vlog from Tone Vase, that this is a no trade zone, and I believe that is because we are price flipping. The red one would be a no trade zone, as would the green one. Need a green 2 above a green 1 or a red 2 below a red 1 for it to be a tradable event. As long as you're just in a 1, that is a no trade zone based on the TD sequential. I fully agree based on that structure, the areas of support and resistance that I showed on the 4-hour. As long as we are trapped in this area of tight range, that's a no trade zone for me, and the TD sequential agrees. So I have been looking into the Heikin Ashi candles quite a bit, and I will be excited to share some more information with you guys. It is a tool that I am finding very interesting and a very good complement for the TD sequential, and I am starting to see that being the case on multiple time frames. So that is something that I am starting to learn why that might be the case. I'm starting to calculate them for myself, and I'm starting to see when and maybe when not they may be beneficial to use. So I have been starting to get in the habit of, when I check the TD, to take a look at the HA candles to see what they're saying. This still is showing a no trade zone, but it's showing that instead of price flipping, we are still on a red 2, and that it would be a tradable event if we fall below 11,067. That happens to be right where I have orders set to sell based on other indicators. So that's something that I really like seeing when I'm testing out a new tool or a new indicator, and it's providing the same entry that I already have identified from my other favorite tools. And that's something that I'm like, interesting. Something that I want to pay close attention to and see if that is usually the case, and see if maybe, just maybe, it would be more beneficial to use this type of candle for the system that I like to trade. Something else that we can look at here is the 4 and the 9-day EMAs are a tool that I use to measure short-term trend. Notice how we got one close below, but then immediately back above, following a test of this long-term EMA. So that's extremely a very, very interesting picture to me. And this is almost exactly how I want it to be designed, in the sense that if you are going for a long-term EMA retest, you're going to start to get some sell signals from the short-term EMAs. You're going to start to get some bearish crossovers from the short-term EMAs if you're going to retest the long-term EMAs. And that's something that you kind of have to deal with if you're wanting to use this as a buy signal, and then you're also wanting to use this to determine a short-term bearish trend. That's something that I've thought a lot about, and it is a very tough thing to deal with when trading Consensio. From my perspective, that's one of the harder things that I have had to try to resolve. And this is kind of the perfect setup where you see it wick down to that long-term EMA and spike hard off of it, which is what you'd expect to see. This is in a bull trend. It's bullish, hasn't been tested in a while. When it does get tested, we want to see a sharp move off of it. So that's what we get, and it immediately gets these EMAs to recross bullish, and they stay recross bullish. Very important. They stay recross bullish. So that paints a very interesting picture in the sense that if you are wanting to buy this long-term moving average, these short-term moving averages are instantly moving back in your favor, which allows you to maybe enter 50% here and 50% here. That's just beautiful. Let's take a look at traditional candles. We get, and let's just go ahead and throw this off for now. We get 1 cross, 2 cross, 3 cross, 4. Okay, so that is a very muddled picture. You're getting whipped. Sure, the entry kind of still looks the same and works good, which is you're going to get that when it spikes like this off of the long-term EMA and has a long wick off of it and a big response. Yeah, that's what's going to happen. So that doesn't really surprise me. The problem is that now we recross, and now we are turning back bearish and maybe getting a little worried, whereas a totally different picture is being painted with the HA candles. It's much smoother. We're not recrossing at all. We're staying above. So that is very important to me. It is a big reason why I use the EMAs instead of the traditional moving averages that Tyler prefers. So we're just going to zoom back into the 4-hour chart really quickly. Notice how the 9 has refused to cross the 50. So I use the 9 and the 50 as a sell signal, and the reason why I do that is because they refuse to cross in a choppy environment. It will happen. I mean, of course, it's going to happen, but it happens much less than with the traditional moving averages. So that's very important to me. Similar that we saw with the Heikin Ashi candles, that we got less choppy action out of the moving averages. That's very similar what we're seeing, that we get less choppy action out of exponential moving averages than moving averages. I say what we're seeing, and we're not necessarily seeing it because I haven't compared. So let's go ahead and do that real quick. Notice these EMAs, they refused to cross. I had my finger on the trigger to sell this candle, and I didn't because these didn't cross. They saved me from selling the bottom. What would have happened if I was using traditional moving averages? Let's go ahead and take a look. There's your 50. Let's move this to the 9. And let's get myself a drink. Okay, like I was saying, right here I have my finger on the trigger, ready to sell, waiting for the crossover to confirm. And the moving average, 9 and 50, what did it do? It crossed right on that candle, right at the low of this move. So right here, we get the bearish cross, the sell signal, and my finger's on the trigger. So the price closes here, boom, I short at, I add to the short at 10,996. And what happens? Smash right in my face. Huge green candle. Just good morning, how you doing? Thanks for adding to your position. So very, very, very different, and all the difference in the world really from this. Finger on the trigger. Oh, it doesn't cross. So let's wait for another candle, see what happens. Boom. Ah, okay. All right. That works excellently. That's exactly how it's designed. So that is a potentially very interesting combination. Seeing the HA candles, Heikin Ashi candles, kind of give me the same sort of action, kind of complement the exponential moving averages in a similar way that the exponential moving averages improved upon the regular moving averages for me, where the sell signals will really refuse to happen. Right here, we get nothing. It stays. I don't need to keep showing that over and over again, but that's something that is very, very intriguing, exciting, and something that I will continue to explore more. And as I have been researching, I've really started to learn more about where technical analysis really came from, and where a lot of the concepts that we use today were developed. And much of what we know about candlestick patterns comes from Japan and the futures markets that were established to trade in rice in the 1700s at the Dojima exchange, which makes you wonder if maybe that's where doji came from. So just some interesting history that I've been learning about that tells me, okay, so candles were started in Japan, and that's where they were developed. Well, maybe there was somebody there that used them their whole life and then improved upon them, or maybe found some ways that they could be added to, and that is potentially what the HA candles could be. These also came out of Japan and were only recently released to the western part of the world. And the favorite complementary tool, as far as I can tell, for HA candles are moving averages and exponential moving averages. So from what I can tell, they were designed to be used with EMAs and MAs. And that's extremely intriguing to me, since moving averages are my main tool for identifying entries and exits and determining trend based on consensio. And for hundreds of years before technical analysis was really being explored in America, people in Japan were using traditional candles and Heikin Ashi candles and moving averages and exponential moving averages to improve upon their trading systems. And that leads me to believe that they are potentially significantly further ahead of the Western world's understanding of potentially just how many people in America even know what Heikin Ashi candles are. It's not very common at all, whereas that may not be the case in Japan. So that's something that's very, very intriguing to me, and something that I'm going to absolutely be exploring more. And I'm very excited to share my findings in future shows, in the sense that originally I was attracted to these candles based on how well they work with the TD sequential. And now I'm finding that to potentially be the case on multiple time frames. And I'm also potentially finding them to work really well with consensio and moving averages and exponential moving averages. So that is a long rant on the candles that I've been excited to learn more about. And stay tuned to hear more, because that's something I'm very excited about. It is 45 minutes after the hour. I am here by myself with nobody to cut me off. So there is one important chart that I wanted to take a look at before logging off. And before doing that, I will pull up this 3-day and see what it's telling us very briefly. Okay, it's price flipping now after failing to get to even an 8. Got a major correction after a 4. See how that looks with those HA candles. Pretty darn similar. This one sure worked out nice, and this has worked out very similarly. Okay, so now I'm going to pull up a chart that is very intriguing to me. As you guys know, I've been following Litecoin very closely, and it is in an absolute do or die position. And I am inclined to think that with the halving being right around the corner, Litecoin, which way it breaks could determine which way the entire market breaks. I really am inclined to think that. So I am watching this chart with a bated breath because it also has a very well-defined and tight range that once its range breaks, significant volatility should ensue. And I do have a firm opinion about which way I think this will break, and I will tell you why. So this is basically the range that I'm looking at. We could draw it a couple different ways. And I usually like to, similar to how Tyler uses a full zone for his support and resistance. I like to kind of draw trend lines that way when they're a little bit subjective. Everybody talks about how trend lines can always be adjusted and yada, yada, yada. Yeah, fine. Why don't you just kind of look at the multiple adjustments ahead of time? That's what I like to do, and kind of look at it as a zone, to where this is very much a sell zone, or it could be sort of viewed. No, we're not going to be able to get a diagonal box in there. Could be viewed as a no trade zone, but essentially, when I see two diagonals where the price wicks up to this kind of top end, but closes more below this bottom end, then to me, this is a very intriguing sell zone, because it's showing a lot of resistance, and it's also showing a very good risk reward. So right in here is kind of the area that is, it may fake some people out who they draw this singular trend line right here and it breaks. So you think this whole structure is broken and that a big move to the upside is coming. And then you just get shot down in a wick like this that comes off of this area. Something that is very common. You break this lower trend line and then wick hard off of this upper one. And that's kind of why I like this as a sell zone, and also why I like drawing multiple trend lines when I'm waiting for a break of the market structure. So if this one breaks, then I'm either going to be selling this or waiting for a break of the higher trend line before buying. So the people that buy a break of this one could get themselves in trouble. They might get themselves a better price than waiting for the break of this, but it's almost certainly not going to work out in the long run to their favor. So if this does break, I don't think this market structure is broken quite yet. I'll be waiting for this one to confirm it, which will be anywhere from 124 to like 121, depending on when it does it. And the reason why I think it's going to break down is because I'm getting a big sell signal, like it or not, and I don't like it. I absolutely hate it. Thinking about selling Litecoin like a month before the halving is making me sick to my stomach, because I still definitely own a pretty significant amount. I want to say 15, maybe 20% of my portfolio is my crypto portfolio is in Litecoin, which I was extremely happy with, you know, before, and now I am really have a decision to make. It looks like, here's my big sell signal. Getting this death cross with the 50 and the 200 EMAs after a big run. I mean, that's like this is as good of a sell signal as I can really get. Well, I take that back. If the trend line breaks, then it is. If we get a recent pull up and into a death cross after a major rally, I mean, a major rally from 33 up to 145. So we've got major rally telling us that we need a significant correction. If we get this first death cross in a very long time with these rolling over, if that's followed by a breakdown of this trend line, that's exactly what I want to see. That's literally my A+ sell setup, is breaking down a long-term trend line, or at least if this isn't long-term, it did lead to huge gains. So breaking down a significant trend line and getting sell signals from the 4-hour 50 and 200 EMAs. That is, like, if you're thinking about a fastball right down the middle, that's it for me. That's a fastball right down the middle. But there is that overlying fundamental factor of maybe this would just be the big shakeout before the final rally leading into the halving. I am fully, I'm very open to that idea. There are very often big shakeouts that occur before big rallies. Let's just kind of go back through something like this breaks down market structure, breaks down below here, and then rallies. Something like this huge Darth Maul candle where you're thinking if this thing breaks down here, for sure we're coming back down here and probably even lower. Time and time again, anybody that's been in crypto for a while, they don't need me to tell them that there will often be shakeouts before massive breakouts. So that's what I'm really struggling with right here and right now, and that's really honestly what makes trading so much fun. Is it's never so black and white that you don't get to challenge yourself, that you don't get to kind of be creative, that you don't get to share your own insight, in the sense that my trading system is telling me to sell here and then be fully out if this breaks down. But there's still some room for my personal touch. Knowing what I know about shakeouts before breakouts, knowing what I know about price appreciation leading into halvings and following halvings, specifically as it relates to the USD pairs, knowing what I know about all that, I want to be very, very, very cautious about this sell signal. So I didn't sell anything here, which I would like almost all. If it wasn't for the halving, I'd be selling this hard. And if it wasn't for the halving, I would have big orders to sell at 116.64 and probably even short. As it stands, I do have orders to sell spot right here for about 33% of my Litecoin. I would be exiting if this breaks down. If it's a massive shakeout before a breakup, then okay, I've still got a big exposure. If this breaks down and continues to break down, I'm going to be getting out and just forgetting about any sort of fundamental factor that I feel might override my trading system. And that's one of the most dangerous things from my perspective, is overriding technicals with fundamentals, because for the most part, fundamentals are subjective. And for the most part, technicals are not. Binance gets hacked and somebody makes off with a ton of money. And then they also announce that they're not going to be offering service to US citizens in the immediate future. And we're also following a major big run. That's very, very bad news. And we were still in a bear market at that time. We hadn't even created a higher high. So you get this fundamental factor that's telling you that the market should correct. What happens? It goes hard in the other direction, goes hard to the upside on bad news. Okay, so it's subjective how the market will react to news. Whereas a death cross of the 50 and 200 EMAs being a selling event, that's not subjective. It's not subjective at all. Sure, sometimes you'll end up buying back a little bit higher, and sometimes you'll end up costing yourself a little bit of money, but it's not subjective. This is a very black and white event that if these cross and the price is anywhere close to them, it is a selling event. That isn't very subjective. So I want to be very careful with overriding an objective sell signal with my subjective view that price should pump leading into a halving. Like, that makes all the sense in the world, but it's still a subjective view. And this is still Litecoin and it's not Bitcoin. And I would feel a lot more confident in a pump from here if this was Bitcoin. It's not. So being that we are stuck in this range and we're waiting for a break of the market structure, we need to be waiting, and we need to be waiting patiently and considering this essentially a no trade zone unless you're selling this death cross, which is a very interesting sell signal to me, one that I almost never pass on. and that I am passing on right now for just the next, hopefully, day or so. I'm really hoping this market resolves itself very soon, because it's not comfortable having to sit here and decide what's more important. A death cross with the 50 and 200 EMAs on the 4-hour, combined with a breakdown of a significant trend line. What's more important, that or a halving a month away? That's a really hard question for me to answer. So I want the market to answer for me. I want the technicals to tell for me. So that's why I'm not selling this like I normally would, but I will be selling a trend line breakdown, because that'll just be too much technical, objective technical evidence that I need to get out. And trend lines can be a little subjective, but not this one. It can't be drawn any lower than that. There's just no way that you can draw this trend line lower than this. And therefore, this is not a subjective trend line. And therefore, if this breaks down following this death cross, I'm going to be getting out. So I have been talking for a long time. I'm going to be exiting my screen share and finishing up my Coors Light. So I sure appreciate everybody who tuned in this evening. I definitely recommend that you go check out the recent podcast with Tyler and Tone. I'm sure that they had a bunch of great analysis there. I haven't gotten a chance to watch it myself, so unfortunately I can't provide any brief tidbits, but I'm sure that there is a significant amount of valuable information there that you'll want to go ahead and take a look at. And for the ones that decided to stick around and listen to me jabber on about my views of the marketplace, I really appreciate you guys. And we'll be doing our best to make sure that we come to you with regular podcasts on a consistent basis, 4 p.m. on Mondays through Fridays, and then on Sundays at 8 p.m. Eastern Standard Time to take a look at the weekly close. So we'll be back tomorrow at the normal time. And thank you again, everybody, for tuning in. We really appreciate it. Have a good one.